What is going on, guys? Welcome back to the channel. My name is Kyle, and in today's video we're going to be doing a little stock market dividend investing video. I'm going to be telling you all 5 dividend paying stocks that I've been buying during this economic downturn and the stock market crash. So without further ado, if you guys love to invest in dividend paying companies and you guys just like hearing and learning about dividend paying stocks, make sure to smash a like on the video and also subscribe if you guys do enjoy it. I'm trying to build a dividend investing community, guys. And also leave a comment in the comment section. You know, that's like one of the best things about this is reading the comments, learning what stocks you guys invest in and all that. So if you like dividend investing stocks or the stock market in general, leave a comment. Let's talk in the comment sections. Have a mature discussion about stocks. And without further ado, let's go ahead and get into the video. So as you guys can tell, my portfolio value is a little bit higher than last time I made a video. Surprisingly, even with this giant downturn in the market, I'm still up. Even with this giant crash, I've actually put in a lot more in the market. But since the market has been absolutely tanking, it's not that much more than my last video. I think the last video that I made, I think I had around 4,000 or something like that in my Robinhood. And now it's about 7,225 at this moment, but it was a little bit higher. It should be a little bit higher just because I've been putting so much money in, but you know, the market going down as much as it's going down is kind of counteracting that. But I hope your guys' portfolios aren't getting hammered, clobbered too much. I know mine has been a little bit. Let's actually go up and check that real quick. If we go to it's already on the year, so I'm down. I'm not doing too bad for the year, matter of fact. But if we go to one day, obviously last Friday I lost $437. I didn't lose it because I didn't sell yet, but I was down $437. If we go for the week, I'm up $1,059. If we go to the month, I'm still down $658. 3 months, I'm down $1,229. So definitely a rough 3 months or a rough quarter. Obviously the year we already looked at, down $390, and then all time I'm down $648. What a rapid swing, because earlier in the year I actually was up $600, probably around $700 at one point. So what a rough swing in the market. And at one point during this downturn, I actually was down $2,000 all the time. I've never thought that I would ever see my portfolio in that short amount of time, get clobbered like the way that it did. It was absolutely nuts. So right now I'm drinking my coffee in my truck. So anyways, let's go ahead and get into the 5 dividend stocks that I've been purchasing like crazy. As far as I'm concerned, with my amount of capital. My definition of buying crazy may be different than somebody else's that has a lot more money than I do. But anyways, just a little disclaimer. Obviously, you hear this in every financial, YouTube video out there. I'm not trying to give you guys investment advice. I'm just sharing this for your entertainment purposes only. And obviously, I like making videos as well. So don't take my financial advice, guys. This is just for entertainment. Do your own research on your stocks. Make your own decisions when it comes to buying stocks. Don't ever listen to anybody. Take it with a grain of salt, and never base your decision to buy or sell a stock on somebody else's advice. Make sure you do your own research. Without further ado, let's go ahead and get into it. Let's go ahead and go to my favorite dividend stock that I've been buying during this economic downturn or this whole situation that's unfolding in the world, and that would be Coca-Cola. I have actually deployed about $636 into Coca-Cola. Probably a little bit more than that, but I'm still down right now on it. I bought a little early on it, but I am getting my average cost basis down. So as you can see, my average cost basis is $45.78. If we go down to right now my total return is negative $44 total, so about 6.5%. I actually was buying a couple of these shares of Coca-Cola when the yield was over 4%. That is absolutely nuts. I could not believe that I was buying Coca-Cola in the 30s. That is absolutely insane. So if we go to the 5-year chart, let's go all the way back to see when it was trading in the 30s. I mean, you have to go all the way back to 2015. In 2015, this stock was trading at almost $37 a share, 38.13. I'm sure it was trading $37 earlier in 2015. But that is absolutely crazy. You cannot tell me that Coca-Cola, 5 years ago was just as, the same company as it is now. There's just absolutely no way. So I feel like I got a dang good deal on some Coca-Cola stock. Anytime this stock trades under 20 times earnings, in my honest opinion, just go for it. That's just me. I go for it every time that it goes down that much. But if we go down, I want to show you guys some buys that I did on it in these past 30 days. So here we go. We got $74. We got 2 shares at $37.31. That was a good couple little shares that I bought right there. 2 more shares at $38. $15 at 37. So obviously I am putting a little bit of fractional share investing in here as well. 2 shares at $42. 1 share at $44. This is whenever I was buying a little bit too early, but I am trying to get my cost basis down. 1 share at $46. I think right here about 2 shares at $49. Should have waited a little bit longer, but you can't time the market. You just kind of have to do what you got to do. And $25 at $53. So I really hope this stock goes back down to the 30s. I will definitely be buying more. But that is going to be my first stock is Coca-Cola. Obviously, they own all sorts of drink products and everything else. And I know they own so much more. It's kind of hard to think of all the brands they own right off the top of my head. But obviously, they own, I'll go ahead and mention a couple of the products they own. Obviously, they own Coca-Cola. They own Dasani water, which Dasani water is a big product in this, crisis that's going on right now. Everybody needs water. Everybody's stocking up on water. Barq's root beer, I think it's Minute Maid that they own. Sprite. What else do they own? They own so much more. I'm going to say they have a partnership with Dr. Pepper. I think they have the Reign energy drinks. I believe that they actually are partnered, and they have a partnership with the Reign energy drinks, which are a really big thing. They're kind of a competitor with Bang energy drinks. So that's pretty cool. They just launched their own Coca-Cola energy drink too, aside from the Reign, and I heard that it kind of tastes like a flat Coca-Cola just with more caffeine. So I'm not too crazy about that. I haven't tried one yet, but I can honestly see that happening. So that's going to be the first stock. Let's go ahead and get into the next one. I don't want to drag this video longer than I really want to. Let's see here. The next one I've been buying heavily is Disney. Disney stock I've been buying pretty heavily. I got about $563 in there right now. I'm down about $91, so about 13%. My average cost is $111. Now, I actually did own this stock before this whole, crisis kind of panned out. So some of my buys on Disney were probably around $130, $133. So it was kind of hard to get my cost basis down a little bit. But I have been buying some shares on Disney. Right now, their dividend yield is 1.83%. And they have a pretty attractive PE for a company of this magnitude, especially with everything going for them, like Disney Plus and all that. And obviously, a lot of these stocks that are in the entertainment business, whenever it comes to like theme parks, I think Disney is probably one of the best. I mean, Disney is absolutely crazy when it comes to their parks. Their parks are so well run, and just an overall really, really good company that will definitely grow in the future. But if we go down, I want to show you guys the recent purchases that I made of Disney. So if we go right here, I bought 1 share at $84. That's a good little buy. $15 at $83. So whenever you see these like small amounts of money, this is just a fractional share that I'm buying. I'm trying to deploy small amounts of money in the market at certain times, so that way I can spread out my capital. $25 at $96. $100. I got 1 share at $100. If we show more, $25 at $104 and $25 at $110. So I probably will buy another share of Disney just to get my cost basis down, maybe 1 or 2. But just a solid company that I've been wanting to get a good position in, and they're not going anywhere anytime soon. They've obviously been getting hit pretty hard because all their parks are shut down. And, they're having to delay all the movies that are being released. And obviously nobody's going to the movie theaters. So just another stock that's been getting creamed and I've been buying pretty heavily. The next one that I've been buying, let's see what we have here. The next one that I've been buying that I've been wanting to build a position in for a while. And just one that's actually been kind of kind of on my radar when it comes to PPC Ian. I know you guys probably have heard of PPC Ian. One of probably my favorite dividend investing YouTuber. His videos are absolutely fantastic. If you guys haven't heard of PPC Ian, type it in on YouTube and go give him a subscribe and a like. He makes absolutely fantastic videos. I freaking love his channel. Definitely one of my favorite, by far, my favorite YouTube channel when it comes to like financial advice and stuff like that. Or not financial advice. Nobody gives financial advice, but financial entertainment. That's what I'm going to call it. Ian is my favorite. Good guy, humble dude, just an all-around great YouTube channel, and I love his channel. But anyways, he's been talking about Starbucks a lot, and I've kind of been digging into Starbucks myself and reading up about Starbucks. And I think Starbucks, over the long term, it is going to be a phenomenal investment, in my honest opinion. I think that in the long term, this company is going to take off and absolutely do really, really well. Because you got to kind of think of it, Starbucks is different than a lot of the fast food because they actually make something. I know this is going to sound kind of skeptical, but I don't want you guys to take it the wrong way. But everybody needs coffee. Coffee is actually a very it's kind of a addictive substance if you think about it, caffeine. And I'm not trying to sound I'm not trying to make this out to be like a deceiving product. It's not. I think caffeine is has a lot of benefits. It helps you stay more alert, be more productive. But they offer something that people want every single day, as rather than other fast food companies. They obviously offer food, and but not everybody wants to get that same food every day. But everybody needs that coffee every single day. And the middle class and upper class and even lower class, a lot of people just cannot get enough of Starbucks. I mean, their coffee is it's coffee. So everybody's going to want to get that coffee before going to work and, maybe on their break or something like that. And just an overall really, really well-run company with a very, very bright outlook when it comes to increasing their dividend. So I have put about $600 in capital in Starbucks. Got about 9 shares. Average cost basis is $68. So I've been really averaging down on Starbucks. I've actually, this whole crisis that's been going on, this is my first time that I've been buying Starbucks. So if we go down, I put $10 in at $57. Man, I wish I would have bought some shares then. I got 1 share at $51. 1 share at $58. If we go down even more, 1 share at $47 at $60. That's kind of a weird fractional share purchase that I did. 1 share at $62, another share at $68, $25 put in whenever it was $71, and $40 put in whenever it was $72, and then 1 share at $78. So a couple of them I could have waited a little bit longer, but like I said, there's just no way to really time the market. But definitely a good company in the future that I think can just absolutely take off. And I did not know this, but Starbucks is in the top 3 biggest fast food chains in America, and I think even worldwide. I mean, it's absolutely nuts. They have crazy international exposure, which obviously can be a bad thing sometimes, but I think in the long run it's actually a good thing, just overall increasing their market share. But that is going to be stock number 3. It's going to be Starbucks, ticker symbol SBUX. The next one that I've been buying pretty heavily is Home Depot. I've been wanting to get into Home Depot stock for a while. Around this time of year, I don't know about you guys, but I'm a pretty. I got a green thumb, and me and my girlfriend, we love to farm and make a garden whenever springtime comes around. So obviously this time of year, we're always in Home Depot buying supplies. Matter of fact, me and my buddies just built a pull-up bar in my backyard because all the gyms are closed. So we're making our own little gym in the backyard. And just an overall cool little project we've been doing. And we're buying, I'm making sure to go to Home Depot to buy all of our supplies. They wanted to go to Lowe's for a second, but I said, guys, I'm a stockholder in Home Depot. We got to go to Home Depot. So just a fun little thing that happened. And I have 2.1 shares in it. So not a whole lot of shares, but obviously Home Depot's share price is a little bit more expensive than others. Got about $400 in it. Average cost basis is $178. So I got my cost basis down to a pretty good level. I'm already up $23, so about 6%. And if this stock dropped in the 170s again, 160s, I would definitely be buying more heavily. Nice dividend yield of 3.15. I think actually I was buying a couple shares back whenever it was I think it was yielding over a 4% dividend, which is absolutely nuts for a staple blue chip company like Home Depot. If we go down to some of my purchases, let's go ahead and see what we got here. I got a nice little dividend coming in. It's already reinvested. Crazy that the dividends, it's cool to see your dividends be reinvested right now. You kind of see how this is like working firsthand. In a time like this, all your dividends that are being reinvested are just icing on the cake, especially when share prices are this low. I got one share at 158, so that was a good buy. That's the same one. Let's go down. $25 whenever I put in, it was 168. Let's go to show more. A lot of fractional share buys. $25 whenever it was 168. I put in $20 and it was 177. I put in $100 and it was 210. And yeah, so yeah, I've just been kind of averaging down on Home Depot stock, and definitely glad I put a nice chunk of change into Home Depot. Definitely a solid blue chip company that I think has a lot of room to grow in the future, and is definitely not going anywhere anytime soon. Now the next one was hard to decide. There's a lot of stocks right now that have good yield on cost, guys. A lot of them, but I'm gonna have to go with 3M. I'm gonna have to go with 3M. 3M has been kind of fighting me for a while. We're not doing good on 3M, guys. We're down $256 on it, about 15%. And it was actually my second biggest position going into this economic downturn or this crisis. So I have been getting clobbered on my 3M position, but I have been buying a couple shares. I'm trying not to buy too much more just because I'm already so allocated to 3M. I already have such a big position in 3M. But I did buy a share last, I think it was Friday or Thursday at $134. So I did bring my cost basis down a little bit. $25 into it whenever it was $133, and then $50 in whenever it was $123. So not a bad thing. And right here, like I said about the dividend reinvestment, this is cool to see it work firsthand and present time. Right here, I had $11 worth of dividend payment that came in from 3M, and it was reinvested. So pretty cool to see your dividends that are reinvested buy shares right now at such a low price. This is when dividend reinvestment or your DRIP programs are really going to help you out in the long term. But 3M, obviously, there's a lot of stuff going on with 3M. Obviously they produce masks, but you can't just think about their mask in this economic downturn. That's just a fraction of their business. They're also in the aerospace and the automotive kind of market as well. They produce a lot of feature in those niches of the economy as well. And obviously those are going to get absolutely tanked right now just because all the airlines and the automotive businesses are just really struggling at this period in time. But 3M is going to be my fifth one. I think there was a couple of times where they've been yielding over 4%, which is a great starting yield on a blue chip company as 3M. And they've also been increasing their dividend for like 60 plus years. So just an overall great ran company. And I think in the next economic upturn, when the economy really starts booming again, there's a lot of industry going on, I think 3M is going to take off, and just an overall well-ran company. And that is going to do it, guys. That is going to be the 5 dividend stocks that I've been really focusing on. There's a lot of other positions that I've bought too as well. So if you guys want to see if you guys want me to go through my whole portfolio and show you guys all the stocks that I've been buying during this stock market crash, let me know in the comment sections. And also, like I said, make sure to subscribe if you don't want to miss any videos that I put out there. I'm really trying to build this channel up and build a dividend investing community. So let me know what stocks you guys are buying. You guys trade safe, trade smart, and I'll see you guys in the next video. Thank you so much for watching. Peace out.